Hey everyone, and welcome back. Today we're going to be doing a deep dive into the world of leverage
Ooh, leverage.
in U.S. stock investing.
Okay.
And more specifically,
Uh-huh.
how you can strategically use it
Okay.
throughout your investing life.
Right.
We'll be looking at a subscriber-only podcast episode
Interesting.
that went pretty deep into leveraging for the long game, for long-term growth, but then also short-term gains as well.
Nice.
So yeah, get ready for some aha moments, especially if you're really trying to
Yeah.
maximize that investment potential.
You know, it's interesting how leverage always gets kind of like this bad reputation.
Really?
Yeah, people hear the word and instantly think, oh yeah, risk.
Yeah, for sure.
But it's really just a tool.
Right.
And just like any tool, it all comes down to
Yeah.
the user's skill and understanding.
Yeah, it's almost like that classic Archimedes quote.
Oh yeah, what's that one?
Give me a lever long enough and a fulcrum on which to place it,
Yeah.
and I shall move the world.
I should move the world.
But in the world of investing,
Right, yeah.
where do we even find this lever?
Exactly.
And what are we actually trying to move?
Yeah, that's the question.
Right.
That's the question.
So investing leverage is basically anything that allows you to
Right.
amplify your returns.
Okay.
So it's kind of that fulcrum that multiplies
Yeah.
the force of your investment.
Right. But just like with Archimedes,
Yeah.
you got to be strategic about where you place it.
Yeah.
Now, this source dove into using leverage,
Okay.
specifically with U.S. stock investments.
Okay, cool. So let's talk about some of those levers that we can pull
Yeah.
in the U.S. stock market.
Let's do it.
The source spends a lot of time on leveraged ETFs,
Okay.
especially the ones that track major U.S. indexes,
Uh-huh.
like the NASDAQ 100
Sure.
and the S&P 500.
Yeah.
I bet some of you are already familiar with these.
Yeah. Probably.
But for those who aren't,
Right.
can you give us a quick rundown?
Of course. So the NASDAQ 100 is an index composed of 100
Okay.
of the largest, mostly tech-focused companies
Okay.
listed on the NASDAQ stock exchange.
Mhm.
Think Apple,
Yep.
Microsoft,
Hey, I'm not
Amazon,
very sure.
all the big ones.
Yeah.
The S&P 500, on the other hand,
Yeah.
is much broader. It includes 500
Wow, okay.
of the largest U.S. companies across various sectors.
Just more diverse.
Way more diverse, yeah.
Interesting.
So now a leveraged ETF
Okay.
that tracks one of these indexes aims to deliver multiples
Yeah.
of the daily return of that index.
So you might have a 2x or even a 3x
Exactly.
leveraged ETF
Right.
for both the NASDAQ
Uh-huh.
and the S&P.
Exactly.
So if the NASDAQ goes up 1% in a day,
Yeah.
a 2x
Mhm.
leveraged NASDAQ ETF
Yeah,
would then go up 2%.
you got it.
Okay.
But remember, this
Yeah.
magnification works both ways.
Uh.
If the NASDAQ drops 1%,
Yeah.
that same 2x leveraged ETF would be down 2%.
Okay.
This is where the concept of inverse ETFs comes in,
Interesting.
which the source also mentions.
Right.
An inverse ETF is designed to move
Yeah.
in the opposite direction
Okay.
of the underlying index. So if the S&P 500 falls,
Yeah.
an inverse S&P 500 ETF would aim to rise.
Whoa. So inverse ETFs are almost like
Yeah.
betting against the market.
In a way, yes.
Wow.
They can be valuable tools for hedging your portfolio
Okay.
against downturns
Mm-hmm.
or for more tactical short-term
Gotcha.
trading strategies.
Okay, cool.
Yeah.
The source also mentioned some specific leveraged and inverse ETFs like
Right.
TQQQ,
Uh-huh.
SQQ, and SPXL.
Yep.
What makes these stand out?
These are all examples of highly liquid ETFs,
Okay.
which means they're easy to buy and sell
Yeah.
without significantly impacting the price.
Okay.
This is important for short-term traders who need to
Yeah.
move in and out of positions quickly.
So leveraged ETFs are one lever we can use.
Right.
But the source also talks about options
Uh-huh.
and margin trading.
Right.
Those sound a little more complex.
They can be, yeah.
Yeah.
But at a high level, options give you the right but not the obligation
Right.
to buy or sell a stock at a specific price by a certain date.
Mhm.
Think of it like putting a reservation on a concert ticket.
Okay.
You pay a small premium
Yeah.
for the right to buy it later,
Right.
but you can decide not to if the price isn't right for you.
Okay.
Margin trading, on the other hand,
Yeah.
involves borrowing money
Sure.
from your broker to buy more stock.
Interesting.
It's like taking out a loan to invest.
Okay. Both of those sound like they could really ramp up your returns.
Yeah.
But probably the risk, too.
Oh, for sure.
Is that why the source emphasizes risk management so much?
Absolutely.
Okay.
Leverage magnifies both gains and losses, so
Right.
you need to be prepared for both.
Yeah.
Managing risk is like building a strong foundation for your investment house. You wouldn't build a skyscraper on a weak foundation, would you?
Not unless I wanted a leaning tower of investment losses.
Exactly. You need to understand how much risk you're comfortable taking
Yeah.
and have strategies in place to protect yourself.
Right.
Like setting stop-loss orders to automatically sell if an investment drops below a certain price.
Okay.
And especially with margin trading,
Yeah.
you need to be careful not to overextend yourself.
Yeah.
That's where those dreaded margin calls
Okay.
can come in.
Right.
You don't want that.
So it sounds like we've got a toolbox full of levers.
We do.
Leveraged ETFs,
Yeah.
inverse ETFs, options, margin trading.
That's a lot.
But the big question is,
Yeah.
how do we choose the right lever
Right.
for the right job?
That's where the concept of life cycle investing comes into play.
Okay.
It recognizes that your investment strategy
Mhm.
should evolve as you age
Okay.
and your financial goals change.
Right.
Are you early in your career, focused on growth, nearing retirement, and looking for stability?
Yeah.
Or somewhere in between?
Yeah, that's a good question.
It is a good question.
So we've got our toolbox full of levers.
We do.
And we know that, like, our investment strategy should, like, evolve over time.
Exactly.
But how do we actually put all these pieces together?
Right.
Like, how does leverage actually fit into these different life stages?
Well, that's where the real strategic thinking comes in.
Okay.
Let's start with someone in their 20s or 30s,
Okay.
early in their career.
All right.
They likely have like a smaller investment base,
Yeah.
but they've got time on their side, time to
Right.
recover from any losses
Yeah.
and let their investments grow.
Yeah.
This is where leverage can be super powerful.
Okay.
It's like adding rocket fuel to their portfolio.
So they could use like a 2x or 3x leveraged EPF
Exactly.
to get those bigger returns.
Amplify those returns.
Yeah, and grow their wealth much faster
Yeah. Potentially much faster.
than with unleveraged investments.
Yeah. Right. But the source is careful to warn against going overboard with leverage at this stage.
Okay.
Like using a 3x leveraged ETF might be too aggressive.
Yeah.
For most people, a more balanced approach,
Okay.
like a 2x leveraged ETF, might be more suitable
Makes sense.
while still giving them that extra boost.
Right. Okay. What about someone in their 40s and 50s?
Okay.
They're probably starting to think more about retirement, right?
Right. Their focus starts to shift
Okay.
towards balancing growth with risk management.
Right.
They still have some time before retirement,
Yeah.
so they can afford to take on some risk.
Right.
But they also want to start protecting the wealth they've built.
So maybe they like dial back the leverage a bit,
Yeah.
move from like a 3x to a 2x leveraged ETF,
Maybe.
or even start using some of those hedging strategies we were
Yeah.
talking about earlier,
Exactly.
like inverse ETFs.
Yeah, to offset potential losses
Right.
in their portfolio.
Cool. Okay, so we've talked about like younger investors
Right.
and those approaching retirement.
All right.
What about folks who are already in retirement?
Okay.
They're probably most concerned with
Yeah.
preserving their capital
Yes,
and generating income.
absolutely. For them, the source is pretty clear. Reduce or eliminate leverage altogether.
Wow. Okay.
It's like shifting from an aggressive offense to a strong defense.
Okay.
Their priority now is to protect their nest egg from any market downturns
Yeah.
and ensure they have a reliable stream of income
Right.
to cover their expenses.
That makes sense. It's like transitioning from a speedboat to a steady cruise ship.
Exactly.
You're not looking for thrills anymore. You want a smooth and safe journey.
You got it.
So the source suggests focusing on more stable investment,
Right.
like bonds,
Mm-hmm.
blue chip stocks,
Yep.
and income-generating ETFs.
Those are good options.
These might not offer like that explosive growth potential
Sure.
as leveraged investments,
Yeah.
but they do provide
Right.
like a much-needed sense of security
Yes.
in retirement.
For sure.
So we've seen how leverage can be a pretty powerful tool
It can be.
at different life stages.
Right.
But it's clear that like
Yeah.
understanding your own financial goals
Mm-hmm.
and risk tolerance
Yeah,
is essential.
absolutely.
Speaking of which, the source makes a specific recommendation
Okay.
for long-term leveraged investment
Right.
in the U.S. market.
Okay.
They suggest considering QLD,
QLD.
a 2x leveraged ETF
Okay.
that tracks the NASDAQ 100.
Interesting.
Why this specific ETF?
Well, the source argues that the NASDAQ 100, with
Yeah.
its heavy focus on technology and innovation,
Mm-hmm.
is poised to remain a dominant force
Okay.
in the global economy for years to come.
They're really bullish on tech.
They believe it's well positioned to benefit from long-term trends like artificial intelligence, cloud computing, and, the ongoing digital transformation of various industries.
So they're essentially betting on the continued growth of the tech sector.
Yeah, pretty much. And they point out that the U.S. stock market historically has experienced longer bull markets, periods of rising prices, than bear markets.
Interesting.
This, they argue, makes a compelling case for long-term investment in a broad market index.
Like the NASDAQ.
Like the NASDAQ 100.
And by using a leveraged ETF like QLB, you can amplify those gains.
Exactly.
They recommend allocating a significant portion of your portfolio, 60 to 70%, to QLD.
Okay.
And holding it for at least 10 years.
At least 10.
Ideally 20.
Yeah, the longer the better.
To ride out any market fluctuations.
Exactly.
And fully benefit from the long-term growth potential.
That's the idea.
Wow, 60 to 70% is a pretty substantial allocation.
It is.
That shows some serious confidence in the NASDAQ 100 and QLD.
For sure.
Now, I know dollar cost averaging is a popular strategy for long-term investing, especially with ETFs.
Right.
Do they mention that at all?
They do. They particularly recommend it. Okay.
For younger investors who have a steady income stream, by consistently investing a fixed amount in QLD each month, you average out your purchase price over time. And potentially reduce the impact of market volatility.
It's like taking a slow and steady approach to building wealth.
Exactly.
Rather than trying to time the market.
Right.
But even with a long-term mindset and a solid ETF like QLD, the market can still throw some curveballs our way.
Absolutely. That's why the source leaves us with this nugget of wisdom.
What's that?
Coordinate any leverage adjustments with broader economic cycles.
So pay attention to things like interest rates, inflation.
Yeah, all that stuff.
Economic growth.
Exactly. Those factors can significantly impact stock market performance.
Right.
And understanding them can help you make more informed decisions about your leverage strategy.
So, should you increase your leverage when the economy is booming? Or scale back when things look a little uncertain? That's the kind of strategic thinking the source encourages.
We've covered a lot of ground in this deep dive, exploring these different leverage tools and how they can fit into different stages of an investor's life.
Right.
We even got into a specific recommendation from the source, QLD, that 2X NASDAQ 100 ETF.
Right.
But before we wrap up, I think it's time to come back to what might be the most important element of this whole thing.
Yeah. What's that?
Risk management.
Oh, yeah, absolutely. It's super important.
Right.
Yeah, it's funny how often people kind of get caught up in the potential for those amplified returns.
Right.
And they kind of just gloss over the risk management part.
They don't want to think about it.
Yeah, it's not as fun.
Right.
But it really is the bedrock of any successful investing strategy.
Totally.
Especially when leverage is involved.
Yeah, it's kind of like venturing out on a hike.
Okay.
You wouldn't just set off without a map or proper gear.
You need supplies.
Right. Or a plan for what to do if you encounter unexpected challenges.
Yeah, you got to be prepared.
So what kind of risk management gear should investors be packing when they're venturing into the world of leverage?
Well, the source really emphasizes setting stop-loss points.
Okay, what are those again?
So these are predetermined price levels where you'll automatically sell an investment if it drops below a certain point.
So it's kind of like your safety net.
Exactly. It prevents those losses from spiraling out of control.
Especially with leveraged ETFs.
Oh, yeah.
Where those small market swings can get magnified.
For sure, stop-loss orders are crucial.
It's like having those emergency brakes on a roller coaster.
Yeah.
They might kick in when you least expect it.
Right.
But you're glad you're there.
You are.
So besides stop-loss orders, what other risk management tools does this source recommend?
They talk a lot about prudent capital management.
Okay.
Which is a fancy way of saying, don't put all your eggs in one basket.
Right.
And don't bite off more leverage than you can chew.
Okay.
It's all about making sure your financial foundation is strong enough to withstand those potential market shocks.
So even if, you're tempted by the potential of that 3X leveraged ETF, you need to, step back and think, does that level of risk really align with my overall financial situation and goals?
Exactly. Remember, leverage magnifies both the good and the bad.
Right.
You got to be prepared for both.
Yeah.
If you're over-leveraged and the market takes a downturn,
oh, yeah,
you could find yourself in a really tough spot.
Yeah. It's like that old saying, don't invest more than you can afford to lose.
Exactly.
But with leverage, that saying takes on a whole new meaning.
It really does.
Because you're not just risking your initial investment.
Right.
You're risking the money you borrowed.
Exactly.
Yeah.
So before you even think about using leverage, take a look at your financial situation, your risk tolerance, and your investment goals.
Right.
Make sure you're comfortable with the potential downsides before chasing those amplified gains.
I think that's really great advice.
Thanks.
So as we're wrapping up this deep dive, I want our listeners to walk away with some key questions to think about.
Shoot.
Think about where you are in your investing journey.
Yeah.
Does leverage have a place in your portfolio right now?
Good question.
If so, which tools?
Right.
Like leveraged ETFs, options, margin trading, align best with your goals and risk tolerance.
It depends.
And maybe most importantly, how are you going to commit to actually managing that risk to protect your hard-earned money?
That's the big one. It's all about finding that balance, between maximizing your potential and protecting yourself from that downside.
Right.
Investing, especially with leverage, is an ongoing journey of learning, adapting, and fine-tuning your strategy.
Right.
And we hope this deep dive has given you some valuable insights and food for thought as you navigate this crazy world.
Thanks for joining us on The Deep Dive.
Appreciate it.
We'll see you next time for another deep dive into the world of knowledge.